Today's mindset topic is identity. You are not your trades. I want to say that again. You are not your trades. This is one of the most important things that I'm going to teach you this entire course, and it has nothing to do with a chart. Here's what happens to most traders. They take a loss and they take it personally, like the market rejected them specifically, like losing means they're bad at this, like one red trade means the strategy is broken. And that thinking leads to revenge trading, over trading, and breaking rules, all of the things that actually blow accounts. A loss is not a verdict on who you are. It is the data. It is parts of the process. Even the best traders in the world lose trades. And if someone tells you they're 100% profitable, run fast. What separates profitable traders from everyone else is not that they never lose. It's that a loss doesn't change their behavior. They follow the same rules on the next trade day as they did the last one. So before you ever go live, I need you to build this separation between your identity and your trades. You are a person of faith, of discipline, of purpose, and a red candle doesn't change any of that. So carry that into today's lesson, because today we talk about entering trades, and your entry has to come from your rules, not from your emotion. We have been building the strategy piece by piece. Week 1, trends. Week 2, breakup structure. Week 3, supply and demand zones. Today is the week everything comes together. Today, we talk about how to actually get into a trade. Ooh, that's very exciting. So this is the moment most beginners rush. They learn a little bit, they get excited, they jump in without the real trigger, and they wonder why it didn't work. Today, I'm going to give you the exact entry rules that I use that has been back tested at over 80% accuracy when followed correctly. And the keywords here are when they are followed correctly. The strategy works. Your job is to execute it the way that it is designed. We're going to be going over entries today, and entries are super important when it comes to the trade, because how you enter is going to make a huge difference. Now, the way that we enter is break of the candle. But the thing is, there are 3 ways that you can enter the trade. You can enter aggressively, which is as soon as the candle taps. You can enter conservatively, where you wait for the candle to close and then you get another candle close in the direction you're going in. So if you're going for buys, it would be a green candle close outside of the zone. Or if you're going for sells, it would be a red candle close out of the zone. The way that we do is the 3rd type is break of candle, which is the last type of entry. Now, I'm not going to go over aggressive entries and conservative entries, because break of the candle is the only entry that I do. When I first started to do this strategy, depending on how I felt is what I would choose in the moment for the trade. The problem why I had to make a decision, or the reason why I had to make a decision on which one I was going to choose, is because I didn't like the idea of being in a frenzy when I'm about to enter my trade. So it's just like I see the trigger candle tapping into the candle, or it's tapping into the zone, and I'm like, oh, should I enter aggressive? Should I enter conservative? Should I wait? And then it's just like, if I enter aggressive and then it invalidates and stop me out, and I'm just like, oh my gosh, I should have waited. Then I want to start revenge trading. Or if it's just like, oh my gosh, it's conservative, it left me, and now I'm just feeling FOMO and I'm just jumping into the trade after it already played out. All these things, and I had to get to a place where I need to choose one, and break of the candle just made more sense for me. So although there's 3 different entry types that people can essentially choose which one they want, the one that's more conservative for me and for my personality type, where I'm not feeling like I have to chase down the trade, or I'm feeling like, oh my gosh, like I gotta guess right before I get in. I want to take the guessing out of everything. The one thing that I've learned with trading is consistency is important, and you want to show up the same exact way every single time. So that means we know our 4 steps. We know we find the trend. We know we wait for break of structure. We know we identify our zone. We wait for the tap. So that means every single time, because this is all about probability. So every single time I see my setup present itself, I'm going to take it unless there's a reason for me not to take it. For example, support and resistance zones and things like that. But other than that, as long as my setup presents itself and my entry presents itself, I'm going to get in. And it takes the guessing game out of everything. I have my data that I can go back and look at. I have the way that I can back test it the same way every single time. And I'm never like, oh, well, sometimes I did break of the candle and sometimes I did aggressive and sometimes I did conservative. So I don't really know which one works. No, I know I'm doing the same type of entry every single time. And I know that that is 70+% win rate. And I know that every time I see my setup, yes, sometimes I'm going to lose, but I'm going to win more times than I lose. And that gives me more confidence to show up and execute my trades the same exact way every single time. So I'm going to start with the trade that I took today, and I'm going to work backwards all of the trades that I took this month that went 1-to-1. So today I was going in and I'm going to do my trade exactly how I did it when I come in the morning. This is 9 a.m. this morning, and I start with my top-down analysis. So I go to my daily. Now, gold has been very interesting because, as we know, gold had been selling off for months. Gold's just been selling off for months. However, most recently, between Trump announcement and all these things, we've been getting some buying pressure. Now, the thing about gold, and as I'm going through this, as I'm saying it, this is my thought process as I'm doing my top-down analysis. So I'm looking and I'm seeing a lot of buying now. But the thing about gold, for us to really truly know that we have changed directions from our downtrend to now uptrend, we're going to really have to start breaking some highs. Like getting these couple of green candles is not like enough to say that the buyers are taking control over the trend, but it is enough to pay attention to, because remember, we're trading for today. So we're not necessarily trying to get in a trade and hold it for weeks or months. No, we're getting in our trade to trade for today. So if I see a bunch of buying pressure, then maybe I need to be on the lookout for buys and then kind of navigate that way. So on my daily and my top-down analysis, we remember from our earlier sessions, top-down analysis helps us to figure out what our bias is for the day. Are we going to be buying or selling? So I always like to mark up levels of support and resistance in the market. Where are buyers and sellers sitting? Pushing price. So down here, I know we worked our way down, found some support, buyers started pushing price up. Now on the 4-hour, I see that we came down and we found this support still, and we started to break structure to the upside. So now on the 4-hour, our trend is becoming a little bit more precise. And if buyers want to continue, they need to kind of break out of this resistance up here. Now, another thing is that yesterday when I took my trade, I was looking for buys, but I also seen this level right here where I was like, the last time we came to this price point, sellers pushed price all the way down. So with that being said, I knew yesterday that there was a chance that we could turn around, and we happened to sell off. So today when I'm coming in, I'm like, although the buyers are looking strong, I know there's a level of support down here, but I still know that this level of resistance is still strong. So I come down into my 1 hour, and I'm definitely open to the buys. I mean, looking at current price, because that's what we want to look at. Looking at current price, we can see that once we found support here, we've kind of just been working our way up. But I really did want to see us break out of here, because again, the last time we came here, sellers push price down, and we want to see price continue, which means we have to break some structure to the upside. So I knew I was leaning towards the buys, but I was also open to sells, because again, trading has like this type of pattern. And with the pattern, it's just like, we look to the left, we see what happens the last time we got here. There's a high possibility that it will react the same. I need to be aware of that. But one thing I do know is that I necessarily do not want to click buy right here where I know sellers are sitting. So coming in today, again, I was leaning towards the buys, but I was definitely open towards the sells. So now coming in a little bit closer to market open, I noticed that we had started to break structure to the downside already. We had some minor breaker structures.
So we were working our way up. We found some resistance right here, and we came down and we started to break structure to the downside. So this was interesting for me, but again, I just wanted to just be cautious. I just wanted to be sure of the trend, because the biggest thing that people get confused about is the direction of the market. And for step one to be find the trend, a lot of times we take trades and we did not know what the trend was. So even though trends are the easiest thing that we probably went over, it's very surprising to see how easy it is for us to be on the wrong side of the market. So we had broke this low here, and to be honest, I still was like, okay, you know what? I honestly do not mind us coming down into this range, because if we come down, find some type of support, we can take our buys up. So I was okay with getting some type of pullback. That was fine, because we know a downtrend does not just go like this. It has lower highs and lower lows. So we had that breaker structure, and I was just watching this zone. This is pre-market, so I had no intentions of getting into pre-market, but I did want to just see how how we would react to the zone. So we came down and we actually broke this breaker structure, which that was giving more confluence that we were working our way down. However, if we look here, we can see that sellers have been having a hard time to get past this area, because when we came this low before, we worked our way all the way up. We came here, and now we have this huge wick at the bottom, meaning that there are still buyers sitting here pushing price up and not allowing price to come lower. So I'm paying attention to this. This is actually our 920 candle. So now I'm like, even if we did come back to step three, which is, well, step four, we found our zone, our supply zone for sales. Even if we get step four and tap into this zone, I'm not too confident if we don't keep pushing down. That's my thought process. But at this point, again, although I'm leaning towards buys, I am also open towards sells. Because remember, when we create our bias, it is just an idea, it is just an analysis. Our job is just to wait and see what the market is doing and react to it. That's our only job, not to try to force the market to do what we want to do. So then as market opens and stuff, you see it looked like we were trying to come back into this zone, but we really started to fight in this area. Like we, for 30 minutes, actually, we really played in this area and consolidated. Like we weren't trying to go up. We weren't trying, as you can see here, like there's a strong support here, not letting price go lower, but we also are not even going to this zone. So this is where patience matters, because somebody, this right here, if anybody traded this right here, their accounts got cooked, because it's going up, down, up, down. There's no clear trend. There's no clear direction. So one thing I am seeing here, we got our green candle. So if if sellers want to continue, then we need to break. And if buys want to happen, then we're going to need to invalidate this zone. That's what I'm looking at. We finally end up getting a breaker structure at 9:55. So we have our step one, our trend. In this example, it's a downtrend. Step two, we wait for our breaker structure, which we got that. Step three, we identify our supply zone. So this is our 5-minute supply zone, because we are looking for sells, and it's the most, so this is our supply zone right here, because we're looking for sells, and it is our most recent green candle before the breaker structure. And we see that, so this was our most recent green candle before breaker structure, and we carry these wicks into it because we do not want any candles coming outside above the zone, because if it's coming outside the top of the zone, then that means it's invalidating. We don't want to see that. So now we identify our supply zone, and step four, we now have to wait for our tap. And again, a tap is just it coming and touching the zone. Now I'm waiting for our tap, and however long it takes is how long it takes. Now we get this huge green candle to come and tap into our zone. If the candle comes outside of our zone, it's invalidated. There's no trade. Now this candle that tapped into our zone, it tapped and it is in there. So this now becomes our trigger candle. The candle that taps into the zone is our trigger candle. And I'm gonna make this clear. Our first candle that taps into the zone, this is our trigger candle. So now we have to wait for our next candle to come and break the low of this candle. The reason why we wait for it to break the low of this candle is because we want to ensure that the trend is going to continue in our direction. So if the next candle continued to go outside of our zone, it would invalidate and the sell idea is almost non-existent anymore. So I'm now waiting. I have to wait for my trigger candle to close. No matter what, as soon as the candle taps into the zone, we're doing nothing but waiting and watching and setting up our projection tool. Our projection tool on TradingView is to the right. So we click on it and we click on short position because we're looking for a sell. So the middle of the projection tool is where we would enter. And we want to put the middle of the projection tool to the bottom of the trigger candle because we're looking for sells. And we want to put our stop loss to the top of the trigger candle. And we'll talk a little bit more about that. And we always want to go our 1-to-1. So before we even enter our trade, this is what we should be seeing. This is exactly what we should be seeing. The reason why is because we don't want to be guessing, oh, I got in my trade. I don't know where I get out. I don't know where to take my profit. We never want that. We need to know before we press buy or sell where we're getting in, where we're cutting our loss, and where we're taking our money every single time.
I want to talk about stop loss placement for a second because there are two ways that you can do this and you need to pick one and be consistent. Option 1 stop loss is at the top of the signal candle for sells and the bottom signal candle for buys. This is the tighter option, less risk, but price has less room to move. Option 2 stop loss is at the top of the entire supply zone for sells or at the bottom of the entire demand zone for buys. This gives the trade more room, more risk, but price has the space to breathe inside the zone. Neither is wrong, both are valid, but here is the rule. Whichever one you choose it before you enter and you do not change your mind mid-trade. Consistency is everything. If you use the signal candle to stop today and the zone stop tomorrow, depending on how you feel, your results will be inconsistent and you won't know why. Pick your method, write it in your journal, apply it the same way every single time.
We have our trigger candle. We take our projection tool and we always also we want to pay attention to the number that we see next to stop. So it says stop 7.52. This is important because it lets us know how many points, pips, ticks, how many points or how big our stop loss is. This is important because it helps you to navigate and figure out how much money or how many contracts, what your lot size is going to be when you place your trade. You never want to go in with too big of a leverage, right? So basically it helps you to understand how much leverage you should put in the trade based on what your stop loss is or based on how big your stop loss is. So we'll talk more about that later, but another reason why we're making sure that our projection tool is here because we want to know how much we're risking before we get into a trade. You never want to get into a trade and realize if it hits your stop loss, you're going to blow your account. We don't want that. We have our trigger candle. We're waiting for the break of candle. So we have our break of structure. We have a tap into our zone. The first candle that taps into our zone is our trigger candle. Now we wait for a break of structure to the downside because we're looking for sells. So that means once that next candle breaks this trigger candle to the bottom side, that is where we enter. It's not necessarily you have to wait for the next candle to close or anything. As soon as it breaks the low, you get in the trade. So the next candle came and we notice here that it did not break the low of the candle. That's okay. This is what we would call here a conservative entry because once we close with a red candle and the red candle is going in our direction. So if someone was getting in conservative, as soon as this candle closed, they would have gotten in. That is not how I'm teaching this entry though. I'm teaching break of the candle. So if the candle did not break this trigger candle, that means we didn't get in yet. However, because we did get a bearish candle, a candle closing the direction that we're going in, that gives us extra confluence and extra confidence that we're continuing in the downtrend. So all we do now, this was our initial trade idea setup. All we're going to do now is adjust this because we had a red candle close that did not give us our entry. We're now going to adjust the middle of our projection tool to the red candle, to the conservative entry candle. This is a conservative candle. We now are taking our entry based off the break of this candle because we did not break the low of the trigger candle. So what does that mean? If the candle after the trigger candle does not break the low for downtrend, so if the candle after the trigger candle does not break the low of the trigger candle, we need to wait for a red candle close. And this is for downtrend. So again, if the candle after the trigger candle does not break the low of the trigger candle, we need to wait for a red candle close. That means if this red candle had happened to be green, we wouldn't do anything. It's almost like we are not even entering into this trade until we get a red candle. So that's why I said there's certain nuances when it comes to the entry. If that next candle does not break the low, we need to wait for a red candle close. In this situation, we got a red candle close. It didn't break, we got a red candle close. So this becomes our new setup. We now have to wait for the next candle to break the low of our conservative candle, and our stop loss is still going to be at the highest point. So say, for example, this red candle happened to come a little higher. Let's just say it came a little higher. Our stop loss would be at that high. But in this example, the stop loss is the same, so we didn't have to move that. All we had to do was move our middle because we're moving where our entry is, and we're just moving our take profit 1-to-1. We now need to wait for our next candle to break the low of this candle. Again, it doesn't have to close. It just, as soon as it breaks the low, we get in. So our next candle came in and it broke the low. It broke the low, so we would have been in this trade. Once we get in the trade, that's it. We're in the trade. So it's either stop loss or take profit, but we're in the trade. So we have to wait. We don't do anything. So you see, as soon as we got in, it came down a little bit. We're in drawdown for 5 minutes already. We're in drawdown. Does that mean, oh my God, we're going to lose the trade? Oh my God, get out the trade. It doesn't mean that. It means we just have to wait for it either to come and hit our stop loss or hit our take profit. I know that there's people that took this trade with me, seen it going green, and got out of the trade. And guess what? They were sad because the next candle came all the way down. This is a winning trade. So as we can see, we got our trigger candle here, and we needed to wait for the next candle to come and break the low. In this example, we did not break the low, but we did get a conservative candle close, which just means a candle in the direction that we're planning to take our trade. Because we're looking for sales, it was a red candle close. So we adjusted our projection tool to now our entry being at the break of the conservative candle, with our stop loss being at the highest point. So you put your stop loss at the highest point from the trigger candle. So if there were any more candles here after the trigger candle, you would just adjust your stop loss to that level first, and then you adjust your 1-to-1 take profit from after you adjust your stop loss. And then once you get that entry, you get in the trade and you just wait for the trade to come out. So again, we got our breaker structure. We got our candle tap into the zone. Because the exact next candle did not break the low of the trigger candle, we had to wait to see if the candle was going to close in the direction that we're going in, which in this case it did. As soon as the next candle broke the low of this candle, we got in the trade. and we set our stop loss, we set our take profit, and we waited, and it ended up playing out. And in fact, this trade went all the way down to this level that I knew that it would go to. You just had to hold on and let the trade play out. So this played out over a 1 to 3. So if we had invalidated this zone, you would have had to wait for a new break of structure to show that we were continuing the downtrend. So the trigger candle taps, and your entry would be as soon as we break the low of the trigger candle for downtrend. So let me just zoom in here. So when we're talking about breaking the low of the candle, this was our trigger candle, this green candle. That means that this next candle for us to enter needed to come lower than this green candle. In this situation, it didn't do that, but it gave us this conservative candle close. So now we're taking our breakup candle entry based off of our conservative candle close, which means as soon as the next, and it has to be the next candle, not 10 million candles after. It has to be the next candle. So we got our conservative candle here, meaning that the next candle needed to come lower than the lowest point of this conservative candle, which we can see that this candle wicked down. As soon as this candle wicked down, this was our entry. So this is yesterday. And coming in again after Trump's announcement, we had bought up like crazy. So on Friday. So now it's Monday, and I'm like, okay, it looks like we're buying. So I come in to my daily, as always, again, and I want to see what my bias is going to be for days. So although I believe buys, I want the market to tell me we're buying. I'm always going to start with my daily and work my way down, marking out key levels. Are we buying? Are we selling? Marking out key levels. Where are buyers sitting? Where are sellers sitting? So we had this area here of resistance. And I had it marked out because I knew that sellers were sitting here, but this little wick here is what was interesting to me. That was the highest point before sellers really pushed price all the way down. But I started to see us trying to break our way through this area. So I'm like, okay, I know that I'm going to stick with the trend until it decides to show me it doesn't want to trend up anymore. But I do need to just be cautious of this here, which I was. But as we can see, we found some support. Down here, we have this clear uptrend. I'm like, okay, if we break through here, if we come through here, then the buyers are not in control like I thought. And I work all the way down to my 5 minutes. So at my 5 minutes, this is what I'm looking at 9 o'clock. Again, we are working our way up since Friday. And just the buy trend just looks valid. Like it just looks valid. We've been buying up. We've been buying up. I just want to see if we're going to continue to go up. Can we break through here? If buyers want to continue, I want to see buyers break out of this zone. So step 1, find the trend. I'm leaning towards the buys. Step 2, I need to break a structure. Now, this was pretty early on. So when I actually got on the market, we had already had to break a structure, and this was step 3, our demand zone, because we're looking for buys. And then step 4, wait for a tap. So in this situation, this was like way early, like 9:15. So really, honestly, by the time I got on the market, this is what I saw. And I was waiting for a tap back into this zone. But technically, this candle did already tap. So this kind of was already playing out, and we essentially missed it. So would have just needed to wait for a new break of structure. Now, because we got my red candle, I'm going to put my black line at the top. Didn't matter if it's red or green, at the top, and I'm waiting for my breaker structure. So now we get this huge breaker structure. Boom. So now I can remove this level of resistance because I see that buyers were able to successfully break above it and close above it, and we're still creating higher highs. So now that we have our break of structure, now I identify my 5-minute supply, my 5-minute demand zone. And again, it's a 5-minute demand zone because it is on the 5-minute time frame. Our demand zone is our most recent red zone before the break of structure. Now we're waiting for a tap. Now, I'll be honest, I was a little bit hesitant because we started to reject off of this line that I had here where I knew sellers would kick in before. And if you see, remember, wicks kind of tell us a story. We don't really want to go any higher. That's what it's showing me. But at the same time, I'm seeing my setup. I have to be able to identify it. And if it makes sense, take it. So we got our tap into our candle, meaning, so this, let me erase this because we only take our most recent zones only, always our most recent zone. So now we have this candle that came and tapped into our zone. This is now our trigger candle. It's our first candle that taps into zone after the breaker structure. So we got that tap. When we got that tap, what I'm looking to see now is for the next candle to break the high of our trigger candle, putting my stop loss at the low of the trigger candle and going 1-to-1. So did the opposite of the sells. I'm waiting for us to pass the high of the trigger candle, and my stop loss is at the bottom of the trigger candle, and I go 1-to-1. So now we have to wait. So we wait for our trigger candle to close. We're always waiting for our candle tap candle to close. And then we wait for our next candle to pass the high because we're looking for uptrend. So we wait for the next candle to pass the high to confirm that we're going to go in our direction. Almost just like the last example. We did not pass the high of this candle, meaning we did not get in the trade. But what did we have right here? We had a conservative candle because it did not pass the high of the trigger candle, but it did close green. It closed in the direction that we're looking to go. So our conservative candle is candle that did not pass the trigger candle, but closed in our direction. So in this example, we are trying to go for buys and we got a green candle close. So this becomes our conservative candle. Two things that we do here. We're going to adjust our projection tool. So we're going to move the middle of our projection tool to the high of our conservative candle. But notice something about the stop loss. We see here that our conservative candle wick is lower than our trigger candle wick. So, like I was explaining in the last example, now we have to move our stop loss to the lowest point because we want to make sure we give our trade room to play out. So we're going to put our stop loss right here on this current candle. Now we're going to adjust our take profit to 1-to-1. We have our trigger candle, the first candle that taps into the zone after the breaker structure. And then we have our conservative candle, which is the candle that closed in the direction that we're going in. Now, I do want to note this. You are not always going to get a conservative candle after the trigger candle. Sometimes you're just going to get your entry candle and you just get in. But when you get the conservative candle as well, it normally will give you a better entry point because now we're closer to the zone than we were had we gotten in here. Now we're getting in a little bit closer to the zone, which is good. But also too, it gives you a little bit more confirmation that we're going in that same correct direction. In this instance, we're looking to take buy. So this gives us confirmation that we're going to continue in that way. So then the next candle came, boom, hit 1-to-1 in one candle. We got in literally right here. So once we see this candle start pushing up, we press buy. Our stop loss is here. Our take profit is 1-to-1. That's it. Winner, winner, chicken dinner. We got it. We have our trigger candle. Right here is our conservative candle. Yep. And then this one right here will be our entry candle. And you don't wait until after it closes. It's just that we know as soon as it comes to our middle of the projection tool, we're in the trade. We have our trigger candle. Our trigger candle taps into the zone. Our trigger candle is our first candle that taps into the zone after the breaker structure. The very next candle over needs to either break the high because we're looking for buys. It either needs to break the high of the trigger candle or give us a conservative candle. A conservative candle, the only reason why we're even highlighting a conservative candle is because in this instance, the very next candle after the trigger candle did not break the high of the trigger candle, but it did close green. It closed in the direction that we're looking to go, which is buys. So now, because you have to wait, we're on the 5-minute chart. So there one of two things, only a few things that happen. One, we're going to invalidate the zone and there's no trade. Or two, we're going to have a conservative candle, which is going to go in our direction. Or three, we're going to have a red candle, which we still have to wait for a green candle because we're looking for buys. Or four, we're going to break the high of the trigger candle and be in the trade. So in this specific example, the very next candle after the trigger candle did not break the high, so we could not enter, but it did give us a conservative candle. So the conservative candle lets us to know that if the next candle breaks the high of the conservative candle, that will
Right.
be our entry candle. So this is on Friday. And we have our level of support down here. And we want to see if sales will continue. We got our breaker structure here.
Yep.
We have our zone, and now we're waiting for a tap. So when we got our green candle, we put our black line there, and either we're going to tap into the zone or we are going to get a breaker structure to continue the trend. So in this instance, we started to work our way up, and then we finally ended up getting a tap into our zone. So this is our tap. So being that this is our tap, this becomes our trigger candle. It's the first candle that tapped into our zone after the break of structure. So we see that we got to tap into our zone. What are we doing? We are putting our short projection tool because short means sales. So this is going to be our stop loss and we're going a 1, 2, 1. So that means that our next candle needs to break the low of the trigger candle and then we can get in. It broke the low. That means as soon as it broke the low, we got in right here. So here's the difference between this example and the previous example. In this example, the very next candle broke the low. So we got in. Here's another thing to note. This candle can be considered a conservative candle as well, because aggressive entry would have been as soon as we got this tap, you press sell and you're in the trade. Conservative is waiting for the candle to close in the direction that we're going in. So technically, once you waited for this candle to close, that is a conservative entry because you could have gotten in when it closed right there, but that's not what we're doing. This trigger candle can also be considered a conservative candle because it closed in the direction that we're going in. Again, we have our trigger candle, which is the first candle that taps into our zone after the breaker structure. But in this example, our trigger candle also is considered the conservative candle because it closed in the direction we are going in, which is red. So we tapped into our zone and then we closed red. So that can also be considered a conservative candle. And then in this instance, we're not waiting for a second candle and then getting into the third candle because our very next candle after our trigger candle passed the low of our trigger candle, so we're in the trade. So in this example, this is our entry candle. It broke the low of the trigger candle. So we have our stop loss at the top of the trigger candle and our take profit at 1 to 1. And we hit it, and we just hit it. And that's why I always say take your 1 to 1, because as soon as we hit 1 to 1, Trump tweeted something and it shot up. So that's why I always say, but we can see we were in there for a little bit, 5, 10, 15, 20, 25, 30 minutes, but this is how it played out. Again, we had our breaker structure. We identified our 5-minute supply zone. We waited for a top. Once we got the top, our entry was based off of us passing the low of our trigger candle. So it broke the low of the trigger candle. We got in. We held our trade. Yes, we came down, almost hit 1 to 1, but we came back up. We were in drawdown. We came back down almost again. We got back in drawdown again, came back down, and we hit it. That's it. The trade's over. A winning trade. Let's do 610.
Right.
So again, just pretend that we did our top-down analysis and stuff. We have our level of resistance up here. This is 9 a.m. So step one, find the trend. I think we might have been selling this day. So step one, we find the trend. Step two, we wait for our break of structure. We broke up. Okay, so we ended up breaking to the upside, but we were looking for sells here. And I think I took a minor break of structure sell on this one. We were working our way up, and there was a level of resistance right here, which we broke out of a little bit, but then we kept coming down. And this is my like A+ setup types, minor break of structure. So after we kind of like manipulate in one direction that we have no business going in, we end up getting minor break of structures to the direction of my bias, which in this case is sells. So now that we got our green candle, I'm waiting for a break of structure. And then we ended up getting our break of structure. Now I identify my supply zone in this instance. This is my 5-minute supply zone. So now I'm waiting for a tap. I got a tap into my zone. Now that I have a tap into my zone, this becomes my trigger candle. And again, the trigger candle is the first candle that taps into the zone after the break of structure. So now I'm setting up my short projection tool because I'm looking for sells. And I'm putting it here because it needs to break the low of the trigger candle. So one thing that we noticed that is different from this is that this candle that tapped, it's a green candle, although we're looking for sells, it doesn't matter. Trigger candle is still the trigger candle. It's just that we're waiting now for the break of candle, meaning we're waiting for the next candle to break the low of the trigger candle to give us our entry. If the very next candle after the trigger candle passes the low of the trigger candle, we are going to enter. So what did we get? So that means as soon as it came down, we're in this trade. We're in this trade right here. We're in this trade. So now we have our stop loss here. Take profit 1-to-1. Boom, done. That's it. And it ended up coming, I think it ended up breaking all the way down? Yeah. So this right here, this trade ends up going 1-to-5. But we're looking just to take our 1-to-1s. So
Yeah.
just like that, boom. Very simple. This very simple textbook. This was our this was our entry candle. This is our entry candle because it was the very next candle after the trigger candle and it passed the low of the trigger candle. The candle that taps is our trigger candle. We came in, we were looking for buys, but we broke structure to the downside. And what happened was when we broke structure to the downside, we were looking at the zone. So we were looking at this zone first. We're now waiting for a tap into the zone. So same thing applies. But then we got this green candle, so we're either going to get another break of structure or we're going to tap into the zone. So we ended up getting a break of structure. The same candle that broke structure ended up also tapping into the zone. So again, when we see this happening, same candle that broke structure that tapped into the zone, we ignore that. So whenever we see the same candle that broke structure tapped into the zone, ignore it. So if the candle that breaks structure closes into the zone, wait for a candle to close outside of the zone in the direction that you're going in. Same candle that broke structure tapped into the zone, ignore it. I want to see a candle close outside of my zone. Also, too, though, I have a green candle, so for it to close out the zone, most likely is gonna have to break structure to the downside. We'll get a new zone. So we ended up getting another green candle, which almost invalidated the zone, and then we ended up breaking structure. When we broke structure, we now have a new zone. However, again, the same candle that broke structure was the candle that tapped into the zone. So we closed into the zone. So again, when I say close into the zone, the body is closed into the zone. I want to see the body close outside of my zone. So when I say outside, that means it needs to close outside of this gray box, not inside the gray box. So the gray box is our zone. And if a candle is closing in, if the same candle that broke structure is closing inside the zone, I don't want to see that. I need to see a candle close outside the zone and then come back and tap. What people do is they consider this the tap. And what they do is they press sell at the tap. Let's just say they press sell at the top, And guess what? Their zone gets invalidated. They lose the trade. I've seen it too many times. So I don't want to see that. What I want to see is I want to see a candle close outside my zone. Once I get a candle that closes outside my zone in my direction, I still have to wait for a tap. Direction means color. If I want buys, green. If I want sells, red. Now I'm waiting. And in me waiting, it avoids me taking a loss because we didn't get a close outside. We end up invalidating the zone. So now that we invalidate the zone, that zone is no longer valid. But also in the same token, what did we end up doing? We ended up breaking structure to the upside. But again, when we broke structure to the upside, what did we do? We broke structure to the upside. This would have been our 5-minute demand zone because we're looking for set for buys now. And guess what? The same trigger candle closed into our zone again. When the breakup structure is the same candle that taps, ignore it. If it doesn't close outside the zone, I want to make that clear. The same candle that breaks structure may tap in the zone, but also may close out the zone. Either way, you still have to make for a tap. But whenever the break of structure candle is the same candle that taps and it closes inside the zone,
The
ignore
body.
it. This is not our trigger candle. We have to wait for a green candle to close out of our zone. So now this candle closed out our zone. But what did we say right here? Once I get a candle close outside my zone in my direction, I still have to wait for a tap. This is where people get screwed up. They get messed up because they end up just jumping in the trade when the trade may still want to come back, when the market may still want to come back and tap this zone. So I still need to wait for a tap in my zone. But in doing that, what did we get? A new break of structure. So being that we got a new break of structure, we now have a new zone. What is our new zone? The most recent red candle before the break of structure. So this is the biggest difference right here. We see our candle that broke structure closed outside of the zone. You see how different that is from a
Yep.
candle that closed in the zone? This is what I mean that the body needs to close outside of the zone. Exactly this. We see the break of structure candle closed outside of the zone. So now that we have the break of structure candle that closed outside of the zone, now we wait for a tap as normal, as regular. The reason why I do it like this is because I personally spend a lot of time back testing. And you never know what happened first when you're back testing because we're seeing the candles as they're already printed. So if I see this candle closing into my zone, I don't know if it was in the zone first before it broke structure, if it broke structure and then closed in the zone. I don't know what happened first. So what I normally see is when that happens, normally, even after we get our break of structure, it may tap in the zone, come out the zone, but it still wants to come back and retest the zone, retap the zone again before taking off, which is why I always want to see that if the candle breaks structure and taps and close inside the zone, I need to wait for a candle to close outside the zone going in my direction and still wait for a tap. If I miss the trade, oh well, I'd rather miss the trade than get in it and get cooked, but I always want to wait for the candle to close out and then tap. So we got the candle to close out. We almost got a tap. Now we have a tap. So now we get out our long position because we're looking for buys. So I need to wait. So let me first put this. This is now my trigger candle. The first candle to tap my zone after the break of structure. So I'm going to take out my long tool. I'm going to put the middle of it at the top of this because I needed to pass the high. My stop loss is going to be at the bottom of this candle. And then my take profit is going to be 1-to-1. So this means in order for my next candle to be my entry candle, it has to pass the high of the trigger candle. It did not pass the high of the trigger candle. You know what that means? I'm deleting my projection tool. Why? because the very next candle after my trigger candle did not break the high, I now have to wait for a green candle close. Okay? So in this example, the next candle was not green and it did not pass. So if the very next candle after trigger candle does not break the candle in my direction and does not give me conservative candle, which conservative candle means it closed in the direction I'm going, I have to wait for a candle to close in my direction. So in this case, it would be a green candle for buy. So now we wait. Boom. Now that we have a green candle that closed out, we have a green candle going in my direction. My projection tool is now, my entry is going to be at the break of that so this candle has now become our conservative candle. Our entry needs to be at the break of this high. Our stop loss is going to be at this current candle. This is our stop loss. And we're going to go 1 to 1. Now we have to see if the very next, because it has to be the very next candle. The very next candle has to pass the high. And if it doesn't, we're going to just need to wait for a new breaker structure at that point. So now let's see. Do we get the high? We got it. Boom. So we're in now. We're now in the trade. This now is our entry candle. So now we're in the trade. We just wait. Boom, done. So we have our break of structure candle. It closed outside the zone. Perfect. Boom. We know we're waiting for a tap. We got to tap into our zone. But the very next candle did not pass the high, nor did it close the color of the direction we're going in. In this example, it needed to be green because we're going for buys. So we do nothing but we wait for a green candle close. Once we get our green candle close, that does not mean we click buy right away. That just tells us that this is now our conservative candle, and we need to wait for the very next candle to break the high of the conservative candle, and then we enter. So we entered because the very next candle after our conservative entry passed the high of the conservative candle. We're in the trade. Now we let it play out. We have our stop loss at the bottom of our conservative candle, and we're going 1 to 1, and that's it.
I want to take a moment and explain why this entry method works, because understanding the why helps you trust it when you're sitting in front of a live chart feeling nervous. When price comes back into a supply zone, the sellers who created that zone in the first place are still watching that level. They remember it. When price taps in and can't close above the zones, that's the sellers defending their position. That's them saying, not yet. When the candle breaks the low of the signal candle, that's confirmation the sellers have taken control. That's your signal to join them. You're not guessing, you're reading what the market is already doing and getting in alignment with it. That's why the back test shows over 80% accuracy. Not because it's a magic formula, because it's logical. You're following the market, not fighting it. But, and I need to say this clearly, that 80% only shows up when you take the trade exactly as it's set up. Not when you tweak it, not when you enter early because it looks good or it's leaving, exactly as the rules say. That's session 5. You now have a complete entry system. So your homework this week, go to your 5-minute chart every single day, find your zone, watch for price to return, identify your signal candle, mark where the entry would have been and where the stop would have been, but do not trade live yet. Mark it, screenshot it, log it into your journal. You are still building your eye. Next Sunday is session 6, and we're putting the entire trade together. entry, stop loss, take profit, risk management, and we let it play out. That is the full picture. So your general template and all of the links are in the description below, and we will see you next Sunday. So closing with prayer as always, God, we thank you for a full system. We thank you that you are a God that completes every good work that you start. And just like you do it in our trading, you're also going to do that in our life entirely. We thank you for the privilege of being able to learn such an impactful skill that not only we can have for ourselves, but we can also teach to other people. We pray that you help us to do everything in our lives with fullness and have the patience to execute it exactly the way that you have designed for us to do it. We thank you for all these things in Jesus' name. Amen. See y'all next Sunday.